There's something happening in the housing market right now that doesn't make sense at first glance. Home sales in the United States are now at some of the lowest levels we've seen in decades. Fewer people are buying houses than at almost any point in the last 30 years. But here's the strange part. Prices are still sitting near record highs. Normally, when demand falls, prices follow. That's basic economics. Less buyers should mean cheaper homes. But that's not what's happening. Instead, we're watching a market where activity is slowing down. Yet, affordability is getting worse. If you've tried to buy a home recently, you've probably felt it. Something feels off, but it's hard to explain exactly why. So let's break it down clearly, step by step, so you understand what's really going on beneath the surface. Right now, the typical home price in the US is far higher than it was just a few years ago. Prices have jumped dramatically in a very short time. At the same time, mortgage rates are now more than double what they used to be. And that combination changes everything. Because when rates go up, monthly payments don't just increase, they explode. The exact same house suddenly costs hundreds more every single month. So buyers are dealing with two problems at once. Higher home prices, more expensive loans. That's a brutal combination. To understand this, you have to look at what's been happening over the last few years. When the global crisis hits, central banks drop interest rates to extremely low levels. Money becomes incredibly cheap. And when money is cheap, people borrow more. Suddenly, buyers can afford more house for the same monthly payment. So demand surges. At the same time, something else changes. People's relationship with their homes shifts completely. Homes become offices, gyms, classrooms, everything. And people realize they don't need to live where they used to. So they move out of expensive cities into more affordable areas. And that creates massive pressure on those markets. Prices don't just rise. They jump. Fast. Now inflation becomes a serious problem. So interest rates rise aggressively. Mortgage rates follow. And suddenly, everything flips. The same loan that felt manageable before now feels overwhelming. Monthly payments surge, and millions of buyers get pushed out of the market almost overnight. Here's where things get interesting. Even though fewer people can afford to buy, prices don't fall the way you'd expect. Why? Because supply is also shrinking. A huge number of homeowners are locked into very low mortgage rates. If they sell now, they have to take a much higher rate, which means higher monthly costs. So they don't move, they stay, even if the house no longer fits their life. This is what's called the lock-in effect. People who would normally sell don't, and inventory stays low. So now we have fewer buyers and fewer sellers. And the result? A market that isn't crashing. It's stuck. Imagine doing everything right financially. Stable job. Good credit. Years of saving. In a normal market, that should be enough. But right now, the numbers don't work. Housing takes up too much of your income. Not because you're irresponsible, but because the math has changed. A lot of people compare this to 2008. But this isn't the same situation. Back then, lending was weak. Risk was everywhere. Today, lending is stricter, and borrowers are stronger. So this isn't a fragile system waiting to collapse. It's a constrained system that isn't functioning properly. So what happens next? Many people are waiting for lower interest rates. And yes, that would help. But there's a catch. If rates drop quickly, demand could surge again. But supply won't catch up fast enough, and that could push prices even higher. So the solution isn't simple. No sudden crash. No instant relief. Just a slow adjustment over time. Incomes rise. Rates gradually ease. More homes slowly enter the market. But this takes years, not months. So how should you think about this? Not based on hype, not based on fear, but based on your numbers. If it makes sense for you, it makes sense. If it doesn't, don't force it. Sometimes renting and investing the difference is the smarter move. What's happening right now isn't random. It's the result of years of decisions stacking on top of each other. And that's why it feels confusing. If you've been thinking, this doesn't add up, you're right, it doesn't. But now, you understand why.